Hello once again, my name is Augustine Ketoglu. Welcome to Augwood Forex Captured Trading Signals Video 2. I want to encourage you to learn how to trade Forex professionally. Before us is the flyer of my first video that is on YouTube and also at our website at www.augwoodforex.com. If you watch this video, you will get the understanding into the broker's trading software, a fair idea, and also how to open and close trade, how to save a trading account statement, samples of captured trading signals by Augwood Forex, and also you will see risk and reward ratios in Forex trading and more. So do well and watch this video also by visiting our website and other videos also. Today I want to talk to you about the two basic approach to analyzing the currency market, which are fundamental and technical analysis. Fundamental analysts concentrate on underlying causes of price movements. Fundamental analysis is the study of specific factors such as wars, discoveries, interest rates, and changes in government policies, etc. Other factors are also currency interventions and natural disaster. Now I want to consider the fundamental. How do we get the fundamental data to be able to trade? When you get access to the fundamental calendar, you will be able to see the events, the economic data that they are about to release throughout the day, that you will be able to know which ones to trade if you are a fundamental trader. Basically, I want to show you one of the information that they release by the US, that is the US unemployment claims. And the result is here, and I want to show you the effect, how the market reacted to this particular news, because anytime at all they release these economic data, it has effect in the market, and also too it has the tendency of changing the trend at which the market is moving currently. Right now you can see before us that the market is moving in upward trend, in the micro trend from before they release this US unemployment claims report, and the report signify that the US has performed well. So there's the high probability that the price is going to move in the favor of the US. And here you can see this is how the market, the forex market works. And also those of you who doesn't know how the market moves or behaves, you can see I was in a trade for a buy, and when they release this information, look at how the market is reacting to it. It has the tendency of turning the market around in favor of the information they release. So this is how the forex market works in relation to the economic data that they normally release. Here you can see that the market is moving in the favor of the US. So let's assume that, assuming I didn't use stop loss, then for me to be stopped out here, you can see that the price or the trade will still be going against me, which is very dangerous. So you must make use of the most powerful tool in the forex market, which is the stop loss, because the ability for you to be able to control your losses is very, very important. So see, this is how the market reacted to the news or the information they release. So those who are fundamental traders, more, this is it, and these are the informations they love to trade. So as you can see, the market, there's volatility. So now this is it. So when they release these data, it has the tendency of changing the trend in the market. So as you are trading, you also open your eyes to the fundamental data that they will release at a time. Now this is it. You can see the market is still moving in the favor of the news. Now let's go to the next session. Now I want to look at technical analysis. Technical analysis studies the price movements themselves. Technical analysis is what one uses to attempt to predict future price movement. Now that they've released this unemployment claim data, we could see the market was responding to it. After a while, after some few hours, the market will now be moving in its general trend. So because of this kind of movement, technical analysts normally studies all these informations, all these releases, and they are able to determine which direction the trend actually is going. So here you can see, with the help of indicators such as candlesticks, trend lines, moving average, Fibonacci, etc., we are able to recognize the two most important truths in the market, which are support zones recognitions and resistance zone recognitions. Now I want to show you some few captured trades that was being executed by Augwood Forex. Now when you engage us to learn, this is what we have for you. We basically trade signals. Now from here you can see trend line sell signal on the 9th of August 2013 on pound USD. It made 76 pips in 3 days, which means that this signal, this is a trend line. The price rose and then touched the trend line and gave us a confirmation for a sell, and the price took 3 days and was still dancing here. So that's to tell you that the way it's moving shows that the sell momentum is getting over. Let's see what happened next. After the pullback, with the help of the trend line that we're able to sold and make some pips, now we now see the price hitting another resistance support. That's support line 1 and support line 2, as you can see it in a detailed form here. This support line 1 and 2, and we're able to get another signal again for a buy. This support line buy signal on 14th of August 2013 on pound USD. It made 158 pips in 2 days. This is it. We are more of technical traders, and we basically use technical analysis to execute all our trades. Now after that move, we now got another signal also here. This is a moving average sell signal on the 20th of August on pound USD that made 216 pips in 5 days. There's a reason for me staying longer in this signal, because of the shooting star that appear at the resistance zone. That is to tell me that it has a potential of moving as a long term, medium long term to a medium term approach. So because of the shooting star, I was able to stay longer in this trade to 5 days, and I was able to make 216 pips with this signal. Now this is another signal also. This is a moving average, and the price sold off, and I got a signal by the moving average for a buy, and you can see it here. This is how the buy signal was formed. And moving average buy signal on 12th of August 2013 on Euro JPY, it made 190 pips in 2 days because of the signal here. This signal is very powerful and based on the moving average signal, so it was able to make 190 pips in 2 days. Now this is another signal also. This is also another moving average. This moving average sell signal on 14th of August 2013 on Euro JPY. This signal made a loss of minus 73 pips in 4 days. As you can see it here, this is my entry, and it took 4 days before I was stopped out. This is it. This is a long-term trading approach. So if you engage us to learn how to trade forex professionally, this is what we have for you, so that you can be able to have time to do other businesses also, so that you will be able to really trade as a long-term trader, because there's much in trading with a long-term trading approach. Now this is also another signal. This is a moving average buy signal on 22nd of August 2013 on Euro JPY. It made 111 pips in 2 days. As you can see, this is a trend line. The price pierced it, breaks it, and came back to confirm that the trend line still holds, and we're able to get a signal here for a buy, and we were able to take that to make 111 pips. So this is it. Video 2 is 2 weeks of trading from on the 12th to 23rd of August 2013. On pound USD, we had 3 trading signals. The first one made 76 pips, the second one made 158 pips, the third one also made 216 pips. Now on the Euro JPY, we had 3 trading signals within 2 weeks, and the first one made 197 pips in 2 days. The second one made a loss of minus 73 pips in 4 days, and also the third one made a profit of 111 pips in 2 days. So in all, this is the summary: 3 winning trades, no losses on the pound USD, 2 winning trades, and 1 loss on the Euro JPY. So in total, within 2 weeks, we're able to make a profit of 685 pips through purely technical trading. Now let's see risk and reward ratio in forex trading. In video 1, we made a profit of 680 pips in 3 weeks. And also in video 2, we've now made 685 pips in 2 weeks. That's in video 2. So in total, we now have accumulated pips of 1,365 pips in 365 pips. Together, it's supposed to be in 5 weeks, as is reflected here, down here, 1,365 pips in 5 days. So assuming you are trading with $10,000 account and you decide to risk 0.5% per trade, with these accumulated pips, you would have made 6.8%, and this is the profit that you would have made, and this is the balance that your account will reflect. This is the balance that will reflect in your account. Assuming you are trading $10,000 and you are trading 1% per trade, on this accumulated, you would have made 13.7%. If you are trading 1.5%, you would have made 20.4%, which is represent $2,047. So your balance now will now be standing as $12,042. Now assuming you are trading 2% per trade, you would have made 27.3%. Assuming you are trading 2.5% with these accumulated pips, you would have made 34.13%. Assuming you were trading 3% per trade, on these accumulated pips, you would have made 40.95%, which is representing $4,095. So your total balance will now be looking $14,095. Assuming you were trading with 4% per trade, you would have made 54%. And if you were trading this high risk of 5% per trade, you would have equally made 68.25%, which is representing $6,825, and your balance will now be standing at $16,850. $825. So how much profit can I make from the forex market depend on how much you are willing to risk. Thank you very much once again. My name is Augustine Katoglu. Engage us to learn how to trade forex professionally. Thank you very much once again.